Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the forexpeacearmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexpeacearmy.com forum and read my analysis for the week before watching this daily video. So let's take a look at the daily chart of the euro currency after the non-farm payrolls release. So what we see, market has made an attempt to make the new low on the daily time frame, but still it doesn't quite sufficient. So market still hasn't quite reached the 1618 extension by this move to the downside, but on the Thursday's thrust up, it has completed the harmonic retracement swing. So by this splash on the Thursday that we have discussed, and we said that it's not very reliable, since this could be just a short covering positions before taking the profit of the solid move down before the significant event as the non-farm payroll release. So that could be just a technical move, and that has happened. So payrolls was a bit better than expected. Market has shown plunge down, taken out of these lows, but still hasn't quite reached the target. But I think that it's not done yet, so probably market could show some still small leg to the downside by just the intraday momentum. Intraday, by on the intraday charts on the hourly time frame, you'll see that it's really huge big black candle down, and market still has some power to proceed lower and reaching this area. This is possible. On the first chart, on this chart, I also would like to attract your attention to the behavior with this red line, that is the MACD predictor. You can see that this is in fact the bearish stop grabber pattern. So you can see that in the beginning of the session, market has shifted trend to the bullish side, but by the Friday's close, this trend remains bearish. And although you can see that by this candle, market simultaneously has created the pattern and has reached the minimum target, that is in fact the previous low. Market, you can see, have taken out these lows, but I hope still that market will show some a bit another leg down. Maybe it will not quite reach the yearly pivot point, or this could happen just by some splash down, something with that sort action. But the major point that I would like to see is the hitting of the 1618 extension, because yearly pivot point is the very big picture. So market could touch it slightly lower 2 weeks later, 2 weeks earlier. This is not very crucial for the yearly pivot point, but the major level that I would like to see that market touch this is 1618 extension, that is BCD pattern, and retracement in fact could start after that, despite the moment that will market touch the yearly pivot or not. But that could happen, that market in fact will touch both of them simultaneously. Besides, they stand not too far from each other. On the another daily picture, I would like you to show the pattern that could trigger, could let us enter on the long side of the market. One of our forumers, the Cosmos nickname, has said that that in fact could be the double repo buy, and that's really so. So you can see this is thrust down. We have minimum sufficient number of bars here, 1, 2, 3, 4, 5, 6, 7, 8 bars to the downside without any meaningful retracement, no close above the 3x3. This thrust looks a bit choppy, not very attractive, especially with this, as you can see, long retracements that has happened inside of it. But who knows, maybe this pattern will work. Now we have the penetration, the close above the 3x3, that's the first close below it. One thing that we need for confirmation is the close above again. When market will close above the 3x3, that will be the confirmed double repo buy pattern. The potential target of this retracement to the upside, since we expect some a bit deeper bounce, could be this confluence resistance areas, 132.43, 132.51 approximately. Also take a look, that is the monthly pivot point. It's 132.61 that hasn't been hit by the market yet. This is the pivot point for the March. You know that market gravitates to the pivot points within the period, and why not? Why market can't test the monthly pivot point with this retracement, with this bounce. That is absolutely possible. Besides, you can see that since January, market hasn't shown any significant pullback to the upside. That was just the minor pullbacks from the most recent swings. Okay, so no pullback has happened from the major swing down, and that could happen currently. So that's what to watch for on the daily time frame. We have estimated the potential target, we have estimated the potential pattern that could lead us to enter long. Let's see on the intraday charts what we will see there. In fact, I have only 4-hour time frame, because on the hourly time frame I do not see any significant moments to discuss. Well, here what I see is, first of all, weekly pivot support one for common wick stands around 129.27. That is absolutely suitable for us from the perspective of 1618 extension on the daily time frame. Trend has turned bearish here. Here you can see on the 4-hour time frame. And take a look, we see the forming of broadening bottom pattern. This pattern, in fact, potentially reversal, but the confirmation of the reversal moment will come if market will take out of this low. So high. So here we see first, second, third, fourth swing. On the fifth swing to the upside, market should taken out of these highs. In this case, we could say that this is probably the reversal pattern. This pattern is accompanied by the divergence you can see, and what is more significant for us is that if this splash up will follow, this will be absolutely in agreement with the daily double repo, because we need the close above the 3x3, so we need this move to the upside, and this move should be higher than 130 area. So that is greater than this fib resistance and greater than this candle down. So market should taken out the highs of this area. That is from the point of view of broadening bottom pattern. But from the point of view of the double repo pattern, we need just close above this green line to get the confirmed double repo buy. But still, in the beginning of the week, I still hope that by this nice momentum down, this solid candle, market still will show us some small move down. Maybe we'll test the weekly pivot support and touch the 1618 extension. So that is the development that I would prefer to see on the euro currency currently. That will give us significant and sufficient confidence that probably now we will start finally to search for the possibility to enter long. When all targets will be hit, we need the pattern, we need the possibility to enter on the long side of the market, and that's why I prefer to see some small leg down on the intraday charts on the euro currency first. So let's be focused on the moments that we have just discussed. Watch for development of these patterns, watch for levels that we have discussed. So let's hope that market will give us what we would like to see.